Hello, everyone. Welcome to another episode of Business Fusion. I'm Philip de la Vega with my co-host Carlos Raldiris. Today, we're joined by Scott McDonough. He is the managing director of Alta Growth Capital, and we wanted him to talk to us a little bit about the boardroom and our boardroom series. Scott, welcome to the show.
Thank you, Philip. Great to be here.
Fantastic. Thank you for taking the time. Give us a little background on you, early on. How did you end up becoming managing director? What has been your trajectory? You've been in different board seats. Sure.
I would say my trajectory is not the most traditional. Just to go back to the beginning, I'm from Utah, originally grew up in Salt Lake City. Went to undergrad there at the University of Utah. Then I went to law school. So I started my career as an attorney, went to Georgetown for law school. Started out as a corporate lawyer in New York, doing large financing transactions, project finance and structured finance. Didn't want to do that my whole career, and I moved to a law firm in Palo Alto, where I was representing tech startups, doing lots of venture transactions. That was in the late 90s, so the first internet bubble. So kind of interesting experience. That's a whole other topic. But I decided I didn't want to be an attorney my whole life. I quit. I got out just before the carnage, so kind of timed that well. Went back to Utah and helped to start a business called Lovesac with a friend of mine that's in the home furnishings and kind of an omnichannel retailer. Today it's listed on the NASDAQ. So although I left the company long before that process, so didn't participate in that. But happy to have that as part of my experience. And after leaving Lovesac, I joined a venture capital firm in Utah because I could combine. I've done a lot of venture capital transactions, and I'd started a business and grown it and brought in investors and raised capital. So that kind of all combined nicely with doing venture capital. But while I was there, I hadn't been there long, I got to know some investors who were interested in emerging markets. And so that kind of being sort of entrepreneurial person that led me down a path of looking at opportunities for investing in emerging markets. I had some experience in Mexico and spoke Spanish. And so started looking at Mexico as a possible investment destination, and saw in it a really good opportunity where you have a large population, a large economy, stable, with a tremendous trade relationship with the U.S. But on top of that, a lack of capital, especially for the small and medium-sized businesses, both in terms of equity and debt. And so that looked like a real opportunity. I met my Mexican partners as we were going through that process, decided to create a team. We went back to these investors that I had met before. They liked it, and so agreed to be an anchor investor in this new fund. And that's how Alta Growth Capital was born. That's about 2007 is when we got our first fund off the ground in Alta Growth Capital, which is a fund to invest in.
That's fantastic. That's a very robust experience. And if I noticed also, not a specific industries, different industries, right, that you're investing in.
Yeah. It's hard to be too sector focused operating in emerging markets. It can be quite limiting. So you need to be able to have some flexibility in that. Although there are sectors that we like and we give preference to, and where we have some experience. So opportunities in those sectors obviously will have more interest for us than maybe somewhere we don't have that same experience.
Oh, that's great. Well, one of the challenges, I guess, that nowadays a lot of the companies, perhaps more so in larger companies, but I'm sure in middle market companies as well, has to do with the board, choosing the right board members. What has been your experience as far as choosing board members or being part of a board?
I mean, there's various factors there, but one of the most important factors in looking for independent board members is domain expertise. So we like to add directors who can bring specific experience to the table, and usually as an operator in a particular sector, has experience as an executive in the same sector or a similar sector to the one in which the portfolio company is operating. So I'd say that's probably the number one characteristic we look for. And that's not always, that always doesn't play out. So there can be exceptions to that, but I would say that's kind of the first factor, and for obvious reasons, because we want someone who can really look at a company and already know a lot of the things that the company is experiencing because of that domain expertise.
What I want to do, just for the benefit of our viewers and listeners, is I want to maybe go a little bit higher, a little bit 30,000 foot level, and then maybe drop down to 10,000 foot. So in order to go to the 30,000 foot level, I'm going to kind of repeat something that I heard Warren Buffett talk about. Warren, who many people know, is a very famous chairman of a board, as well as a board member of several other boards, said that, boards have three responsibilities. Number one, they've got to pick a CEO. They're the ones who are responsible for finding the CEO to run a company. Number two, they have to prevent overreach by that CEO. And then number three, when they're in fact have picked a great CEO and that CEO has created a great plan, which might include things like a merger or an acquisition, they are to kind of deliver an impartial bit of advice to the CEO about whether that's a good deal or not, right? So it talks about those three kind of responsibilities. How do those, how are they similar or are they different from your experience being a board member?
I agree with that, but at least in our experience, it probably goes beyond that, because really maybe that's part of just the world of private equity, because in our business, I mean, everybody is measured to a certain extent, but in the private equity business, the measurement is very stark and can be quite harsh, but it's very, and I wouldn't say it's entirely black and white, but you do have those metrics. And in our world, it's internal rates of return, it's multiples of cash return to our investors. And so we're judged based on those factors. And so obviously looking at portfolio companies, how are they contributing to those metrics? And there's other factors that investors will look at, but those are the two primary metrics. And if you're winning on those two metrics, you're going to have investors who want to invest with you. And so that's, from our standpoint, is a key element. How is each portfolio company helping to deliver on those two metrics? I
had heard that before, that in private companies where private equity is involved, sometimes the timeframes are a bit longer. Of course, Philip and I have been both in private and public companies, and we've weathered the differences in management of those types of companies. And what intrigues me is the fact that with private equity, often the window for demonstrating that success is a bit longer, or at least you perceive it to be a little bit longer. With public companies, we've got that quarterly reporting, and we've got people looking at us all the time, and we're constantly asking questions from analysts, and we're trying to make a good case for why it is they should stick with us. With private companies, it seems it's a bit more private, and so you have a little bit of what seems like a longer time frame. But is it really that much longer? I mean, give us an idea, a sense. as a board member, what might you say to a CEO is their runway for getting something done? If it's not a quarter, is it more like a half? Is it, if it's not a half, it's a year? Is it at the 3-year mark? What do you folks, guide on?
So I would partially agree with what you just said. So I'd say it's on the longer time frame. I'd say yes and no. I mean, yes, in the standpoint that our companies are not trading on a daily basis and not being valued on a daily basis. We do send quarterly reports to our investors where we're valuing the company. So there is some of that going on, but we do have more leeway because the ultimate measure for us, and again, we talked about IRRs and multiples of cash, but we value along the ways, but the ultimate measurement of that is what we return to our investors. And so until we have that realization point of our investment through a sale or through going public or whatever method you use to liquidate that investment, it's not really official. And so it's on paper, that's great, but ultimately you have to be able to generate the cash and return that to investors. So that does give you a little bit more time to work on things. And honestly, in some ways it's an advantage because you can sacrifice near-term performance perhaps. And when I say performance, I'm talking about your P&L. I mean, you can sacrifice, you could sacrifice growth or profitability or certain things on your P&L in the near term if you know that that's part of the plan that's going to generate a few years down the road the necessary exit and the return that you're looking for. So you do have that a little bit longer term perspective, but I would say no from the standpoint that we're meeting with our management teams every month at a minimum, and sometimes more than that. And so we're aware of what's going on a very frequent basis and involved in helping and doing things. And so we're not having to wait till the next board meeting and I know, the good board members aren't necessarily just waiting for the meeting either. There's more involvement along the way, but I would say it's different than your typical board situation whereas we're bringing our team and we're bringing all of these resources to bear on a frequent basis, at least monthly and oftentimes more than that, to assess what's going on in the business. And while there may be things that you're sacrificing near term that should be to the benefit of something that's going to happen later on, and if it doesn't look like it's going in that direction, then you may need to make a change sooner rather than later. And so it's always challenging to change CEOs. It's a big process, and so sometimes you need to have some patience and work through it, and there's just practical realities of that. But I'd say we're assessing performance on a very constant basis.
Well, I know Philip wants to jump in here and ask a question, but I'm getting a sense from your answer that at least when it comes to the types of private boards that you are on and that you work with, they almost seem like an extension of that leadership team as opposed to these arbiters of what's going on, right? You, as you say, you're meeting on a monthly basis. You're taking what seems to be like a more active role in the management of the company, either through your analysis or through your guidance or through your direction. Is that a fair statement?
Yeah, I think that's fair, and I think that's the nature of our business to a certain extent, and also maybe to a certain extent the nature of our segment where we invest, because and that's always a little bit of a tension there, because you do want CEOs to feel like they can run the business, and we're no different from that either. We want our CEOs to feel that we have the confidence in them and they have the reins. So we don't want to go too far from that standpoint. But also we're investing in what we call kind of the middle market, lower middle market, where companies maybe are not as largely staffed, where maybe they don't have as many resources on their management team or within their team. And so a hands-on approach can be a little bit more beneficial for the company versus a much larger company that has lots of resources and systems and all of those things in place, where maybe there isn't as much that you can add from the standpoint of our private equity team. So I think part of it is also just a segment where we operate.
Got it.
I was going to say, Scott, on that, and clearly there's a difference between a, let's say, public board and more private equity board, which is like Carlos mentioned, is closer to management. But even and of course there will be similar missions, if you will. You're looking at pushing the company's strategy, overlooking at market development, execution, and all these things that do not vary from one way or the other. But there are some differences, as you mentioned, on the proximity to the CEO. So what type of CEO would you be looking for as a board member in this particular environment? Someone that is more or is closer to the board and more hands-on with the board?
Beyond just experience and track record and all those essential elements that you're looking for, we'd like someone to be comfortable with working with private equity. So in some of those realities that we just talked about, where we might be a little bit more hands-on, and particularly in our segment of the market, but at the same time, and very, very results oriented. And so that can be a little bit harsh sometimes. But the flip side is the potential upside. So we'd like to bring someone who will have a stake in what's going on and can profit from a successful exit in the future. And so we look for people who are sort of comfortable with that dynamic, that it requires maybe a little bit, I'm just trying to think. I mean, I think any CEO needs a certain level of confidence, but it does. I mean, personalities differ a little bit. So we like people who are really fired up by that opportunity to have some upside, some skin in the game, and really do something interesting and outstanding. And so kind of that personality, that fire, that willingness to try and make it happen. And I think that's even more so in the companies where we're operating because they're a little bit smaller. So there's maybe, in some respects, more elements of risk, but potentially more upside. So, so that element is something that we look for.
What do you think is or has been your experience as far as a board size? Because there's board members, there's board advisors or visitors, but as far as the size of the board, I mean, what's optimal? What has been your experience?
If we're the only investors, if it's a buyout deal, we're the only shareholders, then a board maybe 5 people, 2 people from our fund, the CEO, and then maybe we get a couple of independents who can bring that domain expertise. When there are more shareholders, then oftentimes there are more board members because people want to sit at the table and they want to be participating. So we may have a couple of people on the board, but there might be another fund that has a couple of people. We have the CEO. There may be some founders that are still shareholders. And so that can lead to larger boards which sometimes is good, but sometimes creates the challenges that I talked about in managing all those different investors and interests. So, so when we're the sole owners of the company, 5 is plenty. So we're fine with that in our context. But I'm on some boards that are larger than that. So it kind of just depends on who needs representation. Can you get some independence to participate? So you do get that perspective, and then kind of see how it all shakes out. But if you're getting too big, I mean, if you're getting beyond 10 people at most, then I think it starts to get a little bit unwieldy, because you're getting a lot of people and
more people, more opinions.
More people, more opinions. Sometimes that's good, but sometimes it's not. So, I mean, a variety of perspectives is maybe good. A variety of opinions, not so much. Maybe.
And that's a good clarification. Hey, I want to ask you, when you first sat on your first board, if you will, what surprised you? What was out of your schema of what a board responsibility was going to be like? Was there something that you hadn't anticipated, or frankly, now that you're quite down the line, having been on many boards since then, that you continue to be surprised by from a responsibility perspective?
Yeah, I mean, I first came to the board from the perspective of an attorney, so having to keep board minutes and all the legalistic elements of that. And so I think over time, I've come to learn that the most value that a board adds, I think, is really at the strategic level. Yeah. And so the board discussions that go beyond the standard formalities and things that you may associate with the board, and get into discussions about strategy, about things that are not so cut and dry, more creative. I think that's where you can really have some interesting board meetings and conversations and really influence the company. So I think that's maybe something that I wasn't very tuned into at the first, when I was first exposed to boards. But more and more over time, you come to realize the benefit of having those sorts of discussions that maybe isn't something that's even on the agenda, but comes up in the course of the meeting, or those agenda items that are maybe more open items, or things where there's not a specific objective for that particular agenda item. So yeah, I think that's maybe the area where I've learned more and come to appreciate more.
That's excellent. So, another way of maybe putting that is that people who, if we were going to give some guidance to someone who is interested in becoming a board member, you might say, look, given the fact that, so often we're needing to be strategic, or we're needing to be able to think on our feet because a new issue or a new opportunity or a new problem has come up, one of the ways that you might prepare yourself is by, working in a variety of different companies or sectors where you get different types of issues coming up, and having a track record of dealing with those things. That would give you certainly a little bit of preparation for what it's like to be a board member. Is that a fair statement?
Yeah, I think just developing those skills of critical thinking, of being willing to question. I think going back to those Warren Buffett rules, I think an important role of the board is to question the CEO and question the management team and other board members to raise possible issues or ideas. And so So being able to bring those sort of critical thinking skills to the table is a huge plus. And being able to come up with new ideas or see things from a different approach, and being willing to talk about that and have those discussions, and being willing to challenge, being willing to accept you're wrong, and being able to have more of those free flowing conversations, I think is very valuable.
I was going to say, let's start with being a well-rounded adult.
Yeah, being well-rounded, and like I said, critical thinking. I mean, I think it's a skill that's being lost in many ways in our world today, in our education system and things like that. There's a lot of groupthink in today's world, and fear of challenging or fear of questioning things. So it's a skill that I think is really, in some ways, less prevalent, but so as a result, is more and more valuable.
Yeah, I mean, I agree with all those things, Scott, that you mentioned, and perhaps it's become a lot more evident, specifically in private equity and maybe even VCs, that a lot of the board members of the board is no longer there to just rubber stamp CEO decisions, which, let's be honest, in the past it has been like that. So clearly board members have to be a lot more involved. Part of that, I would say, required beyond the critical thinking, has to do with two areas that I think I like to cover. One of them is coming prepared to the board meetings. Right. There is that misconception, perhaps, or maybe there's some boards out there that people just come to the meeting, have lunch, and share ideas, and off we go. But really, being a board member, having the fiduciary responsibility is understanding or having the desire to understand the business, so you have an opinion to your point, right? And the other thing I would say, beyond coming prepared, is the communication, right? The sufficient communication tools. It is proactive. I've been to some board meetings where the information is shared like an hour before the meeting. Like that's not a lot of time to look at and have some real contribution. What has been your experience? Do you agree with that, or have you seen a change?
Yeah, no, I definitely agree with that. From our standpoint in the fund, because we have more communication and involvement, we're maybe not in that situation as much where we're just getting the materials an hour before and trying to get up to speed. So just by nature of our engagement, we avoid that situation. But it's a very relevant question, and particularly for independents in our boards, we like them to want to be more involved and know what's going on in the business more and do that. I mean, it's always a challenge just getting materials out and things like that, and getting management teams and CEOs to prepare, and because there's always lots of stuff going on. So trying to manage all of that. So certainly there's times when you're getting information last minute and things like that. But I would agree that board members, again, the nature of our engagement is a little bit different, but for the independent board members or people that are participating on boards where they're not in the same situation as us, as the private equity investors, I'd say that is very important and useful. Because yeah, I mean, if you're just showing up, maybe you got the materials, took a quick look at them, and you're going to be in a tougher position to contribute and make those efforts to critically think and analyze and assess the business, because it does take some thought and some preparation. So yeah, we definitely value board members who are willing to engage with the company outside of the board meetings.
Fantastic. Carlos, any last questions? Do we want to be cognizant of Scott's time?
We do want to be cognizant of this time. I did have one final question, Scott. One of the things that we kind of pride ourselves on here at the Business Fusion podcast is sharing with our viewers and our listeners, real practical tips on how they can do something, right? And so, we definitely will have people in our audience who are interested in becoming board members. What advice would you give to them beyond the skills that they need to have, the experience they need to have? But how do they get themselves noticed, if you will, or how do they, actively engage in the process of becoming a candidate for a board? What advice might you give them there?
Yeah, so there's the sort of big picture elements, which one is kind of developing a track record as an executive and someone with experience. And as I told you, when we're looking at independence, we like that domain expertise. It isn't always necessary, but it's definitely useful. So positioning yourself as an expert or someone who has a real track record in a particular type of business or sector is really beneficial, and being able to do things that make it possible for other people to know about your track record and the success that you've had, which kind of leads me to the next point, which again I think is probably the obvious answer, but it's worth mentioning, is just networking and being able to, in our case, our first place was looking through our network. There have been occasions where we've engaged executive search groups to help us with the board search, but I'd say that's the exception more than the rule for us. Our first place that we look is our network. And are there people within our network that have the relevant experience? And part of that's too, because through our network, there are people that we maybe know a little bit better than if you're just meeting them through a search process. So you already have a sense for their personality. You already have maybe a sense for some of these issues that we talked about, like engagement, critical thinking, those sorts of elements. So I'd say that's where the bulk of our independent board members come from. So it's possible. And it may be a little bit different. We are in Mexico, Latin America. So maybe it's a little bit more network oriented than in the US, where you may have more involvement of search processes and a little bit more formality from that standpoint. But for us, the network is the best source. So getting to know people that could be people who could invite you to a board or want to get you involved in projects is a key element. And I'd add just one more thing to that too. I think just being willing to, just having a spirit of helping out, or being willing to have a conversation or do things without asking for something in return. Just those sorts of attitudes and approaches can really provide opportunities.
More of a servant
advice.
More of a servant perspective.
Yeah, whenever you can add value or do something and you make it easy for people, people are going to value that. They like that and will want to engage with you more often.
Thank you. If anybody wants to get a hold of you or want to reach out to you, should they be interested in, I don't know, perhaps business or some kind of a, board advice, how can they reach you, find you through LinkedIn or anywhere else?
Yeah, I'm on LinkedIn, so that's probably the best place. So if you just search Scott McDonough, Alta Growth Capital, you'll find me there. And you can look at our website, altagc.com, and get more information there. But yeah, happy to help out any way I can.
You're not hiding out there. They can find you.
Yeah, I'm not invisible.
All right.
Scott, thanks so much. Genuinely appreciate you coming on and talking to us about your work and the advice that you've provided our viewers around board work. Thank you.
Happy to do it.
Thank you, Scott, once again. And for our viewers and listeners, until next time, be good and do good.
Do good.
Bye-bye.